Hi guys. Okay. Uh, Sorry for my false deep voice. Let's start this. Let me throw in a little explanation right. This is a bullish candle, right? On my chart, I use a white for a bullish candle and for a bearish candle. The concept, the idea between the midnight open and 8:30 open is this is the way I look at it. When a candle closes above the midnight open, it means we are going to seek higher prices that day. I'm looking at this as a daily candle. Now, what is the wick for? The wicks normally is either sweeping Asian or New York retracement. If it's going to be a bearish day, it's either we are going after Asian high, laying it down, then New York will retrace back into the range of the price. When a candle closes midnight above, something like that, or even this, if it's not fully closed above or below the open price, what it tells me is we're going to have a slow day. Our price is going to play its shenanigan that very day. Okay. So let me go over again. What every trader is trying to do is we are trying to catch the bottom here or here so we can play this move. That's all we've been doing. So if you understand this correctly, you can always catch it from the Asian low and play it to the high, London high. Or if it's a bearish day, you can catch the Asian high once liquidity has been purged to play it down. Oops. All right. Oh, come on. Monday, this very Monday. This was the previous day, the Friday. Whilst you're doing this, you have to start identifying some things. I'm seeing a trend line liquidity on Friday that was not taken. So going into this week, it will be one of my targets when we have a very good bullish day, i.e. expansion day, which is a Wednesday. Let's zoom into this. Sorry for the lines and everything. This is Asian low. Midnight is right here. Candle close above the midnight line. So what does it say? Let's go back here again. If it closes above, what do you tell yourself? Price is going to go lower before going higher. It close above, price is going to go lower to gather momentum, i.e. liquidity, trend lines or whatsoever, before going higher. So have that at the back of your mind when I go through this. Price close higher above the midnight. So all I'm expecting in London session is price will go lower, going lower to clear Asian low before going higher. Let me repeat it again. Price is going to go lower before going higher. When I finish the explanation, I'll show you how I incorporate that into my trading. Let's come to New York. This is 8:30 candle. Let me zoom in. 8:30 candle closed below the 8:30. And it closed below. What is it telling me? Price is going to seek lower prices. But before then, price is going to go higher to take liquidity before going lower. And after that lower is formed, remember this is a bearish day, New York session, bearish New York session. After that low is formed, how does the wick play into? Then it's going to move back into the range, creating the wick. So this is also what we call a New York kill zone. So if you understand this price movement, you can catch these 3 trades: 15 pips here, 20 pips here, 15 pips. You are done for the day. 40 pips, I think you'll be fine. Now, let me show you something so you get it more. So this is Monday we are playing with. This is Asian high. So let me draw it from London session all the way to the low. The low that created. And then let's put this here. I'll only do this once, okay? Maybe make it blue and make this maybe white. So look at this as a whole candle, right? London session, New York session. This is the wick. Well, the wick went up to this side. This is the wick I'm talking about from this explanation. That is the wick. The whole move here is the body. So when candle opened above, what did price do? Price went lower before going higher, giving us that wick. From there, it retraces all the way to the low to clear this liquidity. And then New York session came. That is New York PM session. What did it do? Retraces back into the body of the candle, giving us this whole body. I hope it makes sense now. Okay, let's carry on. Now, Monday, how did I incorporate that understanding into my trading? London session, I started from 2 o'clock to whenever New York opened. Asian session is 8 p.m. New York time. All the time is in New York time, so you can convert it to your location. 8 p.m. New York time to midnight, because I want to see the midnight candle. Now, once price comes lower, giving me this liquidity candle, that tells me that liquidity has been purged. Or I can look to the left, okay, this has been purged. This has not been purged yet. That might be the lowest we will go. That's why I always target 1:2. 10 pips if you put it that way. Price has liquidity, has momentum, so price is now going to go back up. Well, if you grab liquidity, you move aggressively, leaving fair value gaps behind. In London session kill zone, that is when I place a trade from here to this week. That is when I'll place my trade here, because I don't see any fair value gap. Fair value gap is simply 3 pattern candles. 1, 2, 3. Leave a gap here. Price will come and rebalance it and then go back up where it's supposed to go. Well, in hindsight, how do I know to target this place? Look at this side. There's a fair value gap on this side. I don't want to aim for the skies. It's a fair value gap right here. That is where I place mine. And then we come back. Now, after we form the wick, we are coming back to range. I see this liquidity candle. Don't be worried if you miss. You think you missed it. It will always give you a second chance. 1, 2, 3 candle. You see this fair value gap right here? You have another chance to catch it here. You can catch it here. If you don't get it properly, you can get it here. That is how I was able to get involved with that. And even if you miss it, look, you know from the daily candle that price is going to go lower before higher and all that. Explain. Now that price is going lower, that is the momentum. That is the main move. There's another fair value gap created here. You can catch it. from here, price will always come back. He uses fair value gap as a support or resistance. In this case, resistance. Price will come back and aggressively go down again, leaving another imbalance. So, well, wait a second. I'll come back, fill it up, and go. Now we come to New York afternoon session. What am I hoping to see? I want to see liquidity candle that has cleared this. It didn't clear it. But what did it do? It moved up aggressively, leaving this fair value gap right here. Because remember, New York afternoon is when price will move back into the body of the candle. So I placed my trade here. Monday was really good for me. And price just came tapping into that imbalance and went, getting my 15 pips. Simple. Tuesday. This is the nuances that sometimes can throw you off, but you always get opportunity. Tuesday, this is the Asian range. Midnight candle. Close above the midnight time. What is it telling me? Price is going to go seek higher prices in London session. The midnight 8:30 is telling you what it's going to do in that session, not the whole day, in that session. So remember that. But then, if price is going to seek higher prices, I'm expecting price to do what? To come lower, to take the Asian before going higher. Well, this time, what did price do? Price just went on its merry way, took the high and continued. But guess what? If you have liquidity, you have momentum. After taking it, left a fair value gap right here. And price came back to rebalance it. That was when I placed my trade here. This was a scary one for me. I thought price was, I said, you know what? I'll just play it because you've taken the highs. And where did I put my stop loss? What do you know? This trend line liquidity that was formed on Friday, that is where price went to clear those liquidities. The session is 2 a.m. to 5 a.m., right? And I got out exactly. If I'd aimed for the ceilings, I would probably be worried. Start New York. What time is that? 8:30. What do we see? FOMC, or is it FOMC? Well, there was news 8:30. FOMC was in the afternoon, right? Sorry. It closed below. So what am I expecting price to do? Price should go higher to seek liquidity and do what? And drop. But because of news, price did not do that. Price went on its way. But guess what, guys? When price left, it left an imbalance right here. So you could play this one for a simple 15 pips. That's 17 pips. Even in news. So I'm not worried if news come and is doing all that. I know this is going to happen. Came back second time, went lower. And then what did we say? After it formed the low, price moved back into the range and then consolidated the whole of Tuesday. Wednesday, this is the last one I'll talk about. Then you can back test or front test or forward test the rest. Wednesday, the big FOMC day. Is it? Let's just check. Right. FOMC press statement. So with the idea from Monday, Tuesday, what happened here? Price closed higher. Very bullish. Telling me that that session is going to go higher. And this is EU. This is why I got frustrated. Prior to price coming down, I had marked down some liquidities that I'm expecting that when price take the Asian low, it will tap into and move. This, to me, is not convincing enough. So I couldn't take a trade. I was waiting for price to just show me some love. like, yeah, push down aggressively. Then I know. But what did price do? Price was doing that. That is when I went to check on GU. And this is what I wanted to tell you guys. SMT, smart money techniques. When you have two pairs like gold and silver, GU and EU, when you have two pairs that supposedly supposed to move in good correlation and one diverges from the other, that one is got a momentum. This is how you do it. So EU was frustrating me. Remember, EU was frustrating me. I got into this, but this move, I couldn't take it on EU. This FOMC statement. How do you even know this is gonna happen? Because the 830 candle, this is bullish. We're going higher. 830 candle also showed bullish, showed bearish. But then GU was showing all the signs with it. GU said, I'm going lower. Watch. EU said bullish, and EU said, I'm going lower. I'm going to grab liquidity. So this is what you do. You first go to add, let me change the time so it doesn't look. You go to that, and we are on GU. So let's add EU. Then you come to new price scale. Close. You double click, change the line to candles. Okay. Right. This is GU, this is EU. They are moving in good correlation. The first divergence came here. Whilst I was getting frustrated with EU to clear Asian low with some VIM. Look at that correlation. GU showed me the liquidity candle, hammer, doji, shooting star, whatever you call it. Show me that GU cleared its liquidity whilst EU was dancing around. That made me realize he who has the liquidity has the momentum. And this is what we call SMT, smart money techniques. What is happening here is the bankers are putting in orders whilst EU is sitting down waiting. When price took off, that was it. See EU, all this, the second FOMC statement, EU was still here. I'll bring this down. Yes, also this down. Slide it over. How do you take this trade? When you see a hammer, the first bullish candle that you see, if that bullish candle is not able to close below the liquidity candle or hammer, boom, you just go for it. Or if you're not sure about that, there was a fair value gap here that was left. Take it and aim for wherever you want to aim for. The first news came, it went up. Second news came, GU just had the momentum, whilst EU. If you miss these SMT techniques, look closely here. See, another one, clear liquidity, and what is EU doing? Nothing. EU was playing. Whilst FOMC news came out and GU was running off, EU was still dancing around. It will eventually catch up, but you would have been out of the market before, but not stressing. That was what led me to take GU. Now, the other thing I wanted to add as a bonus is how I played EuroCard this week. When price leaves you and you don't get an entry, I remember Charlie was saying something that Euro will always give you a second chance in New York session. When price leaves you, here, we are here. Oh, well, I miss it. No. Price comes back. See that fair value gap I've marked here? Where would price stop? Look to the left. This is a breaker block. rejection candle, that is where price will come. If that breakup block lines up with a fair value gap, that should tell you that that fair value gap will hold. That fair value gap should line up with an order block, a breakup block, a rejection block, a liquidity candle block, or another fair value gap. That should tell you that that will hold. And then I played that. That was a good trade for me. But I entered from here because of that fair value gap that was created there. This was the move I missed when I fell asleep when I was talking to Alex yesterday. So after the Asian high has been played off and price start running away, look at this fair value gap right here. What did price do? Came back and tapped right into it, lining up with that breakup block. So when I woke up, I was like, well, I missed it. But look, it gave you the chance again. This is the one I was complaining in the group. See that fair value gap there? Is it going to hold? Is it going to hold because we have breakup block on the left? So I just took it, put in my load to the leg that caused that fair value gap. And then that was how I got lucky today. And then it hit my TP so quickly. I took partial and it hit. How do you know where to put your TP? That's why I put these two yellow lines. The first TP was this fair value gap that lines up with this breakup block. So I was thinking price might reject it. Took the first partial. This is the second liquidity here. So I didn't want to aim for the skies. On the hand side, I should have. What did price do? Price blasted through the win. Now, the reason why UCAD was frustrating everyone today, I wanted to just show you guys something. I was even frustrated for Friday. Look at this candle, midnight candle, what I was explaining earlier on. You see, the midnight candle, it did not close fully above the line. I didn't know on the high side before I went to check, and I realized, oh, so see what price did. Price just messed around. 8:30 candle was here. Price closed high. So if you understand this 8:30 and you come into the market, price closed above the 8:30, which is we're going to go lower to go higher. If I'm not sure, I will play this fair value gap to go that lower. It's very fun. I will play that to go lower. Now that we've cleared liquidity from the left, now we are going higher because that's what the 8:30 candle said. That is the fair value gap in left. Price will tap you in, go higher. Meanwhile, the midnight candle already said, I'm going to frustrate you guys. And yep, did frustrate us. But then on the hand side, you could have played that. I think that is just about it. This is the only psychological thing I put in through. Today, the same thing. I want you guys to go and back test it and just... Me personally, I don't back test. I forward test. And how do I do it? After I've studied a strategy and I figure out that it's working. 3 months ago when I was doing this, when I started trying this, I would try with one lot. Because I had a 100K account, right? I'll try with one lot to see if it's working. Second month, I developed confidence. I started with 3 lots, 2 lots. And then on the third month, I realized that, you know what, this is working. I went to 5 lots because I was forward testing it. Now I'm going with 10 lots for 10 pips. 10 lots for 10 pips. In a day, if I catch 2 of those, that's 20. 2,000. I'm good. Now I have 4 accounts. Hey, that's... So if you have 5,000K account and you want to try any strategy, try with 0.01 to build confidence. But back testing is mostly on the hindsight. We don't know what price is going to do in the future. So it's better to build the confidence that way. I hope this video will help. If you have questions, you can always post it. I'll make myself available on Saturday to answer some questions. Because this fair value gap idea, I probably would have to drop another video to explain it into details. But I was just showing the midnight candle on how I incorporate it into my trading. Always think about this, what prices is going to do for the day. If you want to catch the wick, fine. If you want to catch them, that will also help. Try a little bit. That could also. It doesn't give you the bias for the whole trend, but it shows you what price is going to do for that day. So please post any comment or addition or how I can make this video better next time. I'm pretty sure I need to get a filter because I can hear myself like really. So yeah, that is all I have for that midnight candle, and it's kind of a little bit long. So yeah, thank you guys.